Hello and welcome to Chartbusters. It's a Friday morning. We kickstart a new series, and in fact, the Nifty is trading with good gains. We're up close to around 50 points. You got a bit of a dip early this morning, but that dip has got bought into. It's going to be a big weekend. We have got a lot of cues coming up in November. Interesting to see whether or not we can hold on to these levels. But what's clear is that 11,900 to around 12,000 mark, that's been the crucial resistance zone. So let's see whether or not the bulls have enough to push us about that level. Looking good for now, Mangalam.
Looking good for now, Nigel, and a lot of stocks are doing well in the broader markets. We have the mid-cap index up by almost 1.5% right now, outperforming the other frontline indices. One of the stocks which is on our radar is Blue Dart. Blue Dart reported a strong set of second quarter numbers. We had the gross margins expand and we had the EBITDA margins expand as well. So to give us the fine print for the second quarter and the outlook for the second half of this year, we have Mr. Aneel Gambhir, the CFO of the company, joining us now. Thanks a lot, Mr. Gambhir, for joining in. First up, if you could tell us, how much of this revenue was price-led and how much of it was volume-led?
Basically, as we know that this is a pandemic period and we are still under lockdown situation. So there has been some challenge on the volume side because of offices not working to the full capacity, and also BFSI sector, which is one of the main sector in document business, also not performing to the level which they were doing pre-pandemic. So obviously, volume side there has been some challenge, but there is a better price realization which we have during this quarter. That is where we are seeing growth on the top line.
What was the price realization? What was the volume decline? Because you said volumes aren't doing well. So as a result of which, is that the reason why your EBITDA increased as well?
Basically, I mentioned about the document business, but then there is a strong growth in non-document business. There's a volume growth which is in double digit on the packages side, but on the document side, obviously this challenge continues. So that's why overall, if you look at it, there's a slight drop in volume. But then largely the top line growth is driven by the revenue realization improvement.
Okay, all right. Mr. Gambhir, before we go on, just want to congratulate you and your team as well. You have made everyone happy. Going by your numbers, you'll have been delivering all your parcels, so that's good news for your customers. You'll have rewarded your employees because of their, the kind of hard work they put during COVID times. That's 34 crores odd. And today the stock is up, so your shareholders as well will be happy. Getting back to business, so congratulations on that front, but we want to understand more about business. You were talking about your document and non-document business. Break that up for us. How much is, each segment? And also the most important part of your numbers is the big margin improvement. What is the realistic margin, range you can give us for the second half of the year? I know you've been taking the cost cutting measures, but what is that, margin outlook that you could give us?
As I mentioned that, the growth in top line has been driven by better revenue realization. At the same time, as we have been talking in the past about cost efficiencies. So there's a number of initiatives which are undertaken to improve our cost efficiencies. Both put together have helped us in improving our margin. In fact, last 2 quarters have been impacted by COVID and lockdown, severe lockdown, where only essential services were allowed. Otherwise, you would have seen that kind of impact even in the previous quarter. The cost efficiency initiative which we've been talking about.
So let's get to the margin guidance. Margin guidance, you want to make your shareholders a little bit happier. They'll want more clarity. So give us a rough range. Go ahead.
As a company, we do not provide margin guidance. But having said that, we are seeing green shoots in economy and growths are coming back. We are now better than pre-COVID scenario. So I'm sure given the current ecosystem and also the kind of talk we are hearing from every corner about upsurge in economy, I think we are optimistic about the future.
We take the point, Mr. Gambhir, like you said, a large part of your revenue growth was price-led. This is an extremely competitive industry. Do you think going forward you'll have to reduce the prices as volumes and other players open up? That's point number one. Point number two, how much does e-com account for in your overall revenue? Because we've heard everyone talk about e-commerce doing rather well.
Sure. So let me answer your last question first. Yes, e-commerce even globally also has been, post-pandemic scenario has been growing much faster pace. because of some apprehension from people for moving out, etc., and also restrictions being imposed by government. So people obviously want to have that facility home delivered. So we would also see that repeat. We expect that that will repeat even in India. So e-commerce is one of the biggest vertical in our overall volume, or rather, I would say the
How much?
top line movement. So it'll be in the range of about between 1/4 to 1/5 in that range, kind of a scenario.
So 20-25% of your revenues.
Okay.
Okay, all right.
So that is a vertical.
Yeah.
And on the other side, your first question was related to
Pricing.
pricing. Yeah. So pricing, you know that Blue Dart is a premium player, and we more than focusing on pricing, focus on delivery solutions and also value addition to the customer business, partnering with them, ensuring that their goods reach safely. So from that perspective, Blue Dart would continue to remain a premium player. So from pricing perspective, we do not see a reduction. On the contrary, we have already announced a general price hike effective for January, which will be implemented as we move ahead.
What is the price increase you have implemented?
Which would be implementing effective for January.
What is it? The number?
We already announced that CPI. So we said about 9.6%.
Okay, and October to October, this October is how much better than last October? Very quickly.
Will be very difficult to comment at this point of time.
Okay.
Because we are still in October, and generally we would not give out guidance from that.
Is it better?
Yes, we are.
Is it better? This October is better.
Yeah.
Got it.
Yeah,
All right, Mr. Gambhir, thanks a lot for stopping by and giving us all the details for the second quarter as well as the year going ahead. Looks good as far as the e-commerce vertical is concerned. Margins likely to be better. Also, you've announced a price hike, 9.6% with effect from January 1st. Wish you good luck. Wish your shareholders good luck as well. And the fact that you've paid your employees 34 crores for staying on course during COVID times. With that, we'll slip into a short break. But as we do that, here's something that you, our viewers, must take note of. CNBC TV 18 and the National Stock Exchange, we've come together to promote investor awareness through a special campaign called Informed Investor. This empowers you to make the right decisions with your money. Well, before signing a check, you always ensure whether it's crossed or not, right? Similarly, never leave anything blank on your KYC. Strike off all unwanted options while filling the KYC form. For example, an investor who wants to trade in the equity segment will put a tick against it and strike off the F&O or the currency derivative segment. Remember, not striking off the blanks in KYC is like issuing a bearer or a blank check.